The market is roaring ahead with the best momentum trades that we have seen in years, and it's getting better and better each and every week. We're going to drill down and have a look at the leading thematics behind these top momentum shares, because that's the next layer that helps us as momentum traders capture the best opportunities that are on the ASX right now. We'll also look at the launchpad, which is quite often where we see those new thematics emerge from and then transition into becoming those top leaders. In both of these lists, we're going to lean on Gary's experience, where he's going to have a look at the setups, the volume analysis, and the key takeaways that we want to have improving as traders. Because when Gary gets this list, members also get this list at the same time. They mark up their charts, they send through their requests, and most of them actually use this video as a learning mechanism every single week to not only stay on top of the top stocks and know which ones they are, but actually to hone in and sharpen their charting eyes or their trading skills. And to that we say, good morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah, it's thought last week didn't think it can get any hotter than last week, but yeah, we obviously proved wrong. It's got just as hot, or if not hotter. So yeah, there are some vertical trends starting to develop here. That's the one thing there, and some of them have been running for quite a while, so they are getting very long in the tooth. But as I've often said, these things can run a lot longer than we think. Yeah, and it's a bit like in the early days of your trading, you're trying to buy lows, and they go a lot deeper than you think. And that's where most of the losing traders dwell. If you're trading the momentum sort of stocks that are going out, it's just they do have a habit of just kind of defying gravity for a bit longer than you think, and they just keep going higher than you think. It's this market's proven that over again, but I think the last 3 or 4 years we've proven that with the analysis there, that some of these you just don't know how hard these things can run here. So, but what's the data telling us this week, Chris, apart from this is the hottest market of the year?
Well, this is the hottest market that we've seen. It's more than a year now, actually, so we're pushing that on. I'll load up the screen because that data is really quite compelling. And as that's loading, this week we've actually had some pretty funny and interesting comments from members that one of them is traded for 30 years, says he can't remember their gold stocks, and the whole mining sector lighting up. And we'll have a look at that in a second, because that I thought, yeah, that's true. You and I traded the commodity boom about 20 odd years ago, and it was strong, but this is also massively strong. And then I love another one.
I do remember the last big gold run there, Chris, as opposed to like the mint and stuff. Because obviously we saw yesterday massive lines at the mint, and there's one in the UK as well where people were lined up to buy gold. But like they're buying a toy, which is I can only find one shop in the state. So yeah. But I do remember the last major bull run there, where at the very end, we didn't have the bullion sort of shops there. What we had was recycling, not recycling, had sort of places where you could bring your gold in and get it melted down.
Oh, trading your gold, yes.
Yeah. So if they were bringing their old rings in and stuff and getting them melted down and stuff, and cash, I mean,
sky high prices.
Yeah. So that type of euphoria, that type of event there is a red light, for that train. It's we're getting to the really frothy end of the market there. It's a bit like when you see that, they say on the newspaper or the front of headlines talking about bull markets and stuff there. It's once you sort of see the headlines there, then you got to be pretty wary here. So we should be very wary of gold here, because we're just seeing, apart from having the highest RSI rating for about 50 years on the monthly chart, we are seeing all the stuff that just frothy top, and then everyone's, people, lining up to go and buy gold there. But it's pretty interesting actually, because I saw Roger Montgomery used to talk about when you buy gold physically, there's a bid and offer, and there's a fair spread. So to buy actually physical bullion,
You're not buying like an ETF where it's a super tight margin, market makers all over it.
To turn it over and sell it the next day if you had buyer's remorse the next day because it went down $10, you would suffer a fairly large loss because um the fees, the brokerage and the spread are pretty wide. Whereas like a gold ETF is much easier way to trade it. So
Yeah, that's good luck to them if that's what they want to do. They store it on the bed and that holds their value, and 30 years time it's higher. Could be tomorrow. But the momentum that you're talking about, so the amount of solid trades that we're seeing in the market, we're seeing a broader number of companies being what we call tradable, as in decent volume, decent turnover, decent market cap. And as this chart shows here, we're at 100% again. We've seen that a couple of times in the last few months. But to put that into context with how you started, it's kind of the best it's been, and we've been saying that. We've got this is the times scale on the top left, the chart. So we've just got the time on the x-axis, and today's date is the furthest right. And as you see, these light blue bars are just getting higher and higher and higher, and they have been for over a month. And that's why we've been climbing at 100%. To answer the question for anyone who wants to know longer than 14 months since we've been doing this specific calculation, we'll go to that chart in a second. I just want to show that where we are now with this average momentum score for the top 30 companies, it's way out here. And you can just see this anomaly, the scarcity. This is the fat tails that we see in financial markets. Where we are right now is very rare air. So it's a fat tail. It's more than 2 standard deviations out from the last 2 years. I know we're doing a lot of statistical talk there. What that boils down to is this number here, the 44%. If we pick any random company on the ASX, we're 44% more likely to find one at random that goes up 10% in the next month just because of how hot this market is. So this is a portal that members get, and they get to see crazy stats. So that's the dartboard. That's how good the dartboard is. The dartboard's 44% better than it normally is. And the dartboard can get actually bad. It can get sort of like minus 50% than normal. So we're at that's not 100% over base. That's not 44% over baseline. That's over average. Yeah. And then this is telling us how hot and how strong that is of getting just the random companies on the ASX. So if you find 100 companies just at random in a month's time, on average 16%, 16 of them are going to go up 10%. So that's the dartboard. That's how likely the dartboard is to find you some winners. And that's why we're looking at the thematics, because we know statistically we actually double that number if we're in a leading thematic. And then we're going to double it again if we're over the 50-day moving average and all the things that we talk about, which you'll cover in the charts. But the last one that I want to look at is putting it into the context of the last time we had a really roaring market at how strong momentum trades were. This is the chart of optimal trading conditions. And this green dotted line here is telling us how today's performance is. Remember, we just saw it's better than the last 14 months. It's the best, and we keep making and redefining the best over this period. That's the green dotted line. If we look back into the COVID era, which is sort of between 2020 and 2022, the best times were sort of more than double as good as this. That's when we had the bourse was full of lithium and uranium companies that were just running absolutely screamingly hot, and they went surge after surge after surge. That's how strong the momentum markets were. So as you've said, it can actually go hotter and harder than what we've seen. And the final point, which we've been talking through members this week and sort of getting a bit of chat going on some of the posts we have, that all happened, the best momentum times we saw, these pink and purple lines, where it was more than twice as good as what we have right now from a momentum score perspective. It actually happened after the market had been come off its highs for about 6 to 9 months. And that is really critical. Fits in with your Tuesday reports. I know you talk about cycles all the time, and anyone wants that, look at the Tuesday reports. But hopefully that answers your question as to how good are the opportunities right now? Well, the best we've had in 14 months.
So, Chris, what makes those two high of a range there? What makes them so much more there? Was it the number of lithium companies, or the number of companies hitting heights, or was it the amount of them? How big of the moves were out of that grouping and stuff there?
So the amazing thing here, so I went through, because you and I were sharing this data at the time, and I went through and looked back through all the emails that we sent and the Excel sheets and the calculations. I was surprised at the difference that only 4 days made. I think it was actually a weekend here if we look at the calendar. So we're looking at like Friday to Tuesday kind of thing.
Yeah.
And so you're asking the difference between the pink line and the purple line?
Yeah, as opposed to all those other cluster where we are now, because I mean, this feels hot as hell right now. Yeah, those other ones, you're saying there's two markets, two periods there who are even hotter. It's like, that doesn't feel that way to me, but yeah.
So what we're looking at there, see on the chart here, these little arrowheads on the left-hand side, they're right next to each other. So that's on the time scale, that's how close they happen to each other. And that's showing us how at the extremes, our 1, 2, or 3 days difference can be the difference between these lines here. Which on the range of things is actually sort of almost between average and the worst. So that's the fat tail side of things, which getting deeper into the data, but the sort of picture tells 1,000 words. What we're looking at here is if you can see the bottom left-hand chart, we see the bulk of the days are around here on the left, and we've got the standard deviations in the dotted lines, and the orange one is today's score. What to answer that question, a difference between pink and purple, or the absolute best day we've seen in 5 years versus the second best day? It's the fact of if we extend this dark blue line out, we're looking at sort of 1 day out here and then the next day way out to the side. So it's just the absolute extremes of the fat tails. Think of it as when the market absolutely capitulates and it's down, 1,000, 1,200 points. That 1 day. It's that in reverse. There is 1 day where momentum absolutely eclipses, and it gives.
So it's more percentage of moves rather than number of stocks. Would that be right?
Yes, it's actually the number of stocks. So think about the top 15 or 16.
Yeah.
And we just have, a dozen or 2 dozen companies on the ASX that are up 100% a week, that kind of thing. And they're tradable, so there's enough volume going through them. That's how the extremes look. So we have enough companies that fill up, and for that list, it's actually 30 companies, because this is ranked number 30 out here. We've got 30 companies that are probably up minimum 100% in a fortnight, and definitely like 150, 200% in the month. That's the kind of extreme that we get to out here. So is it possible that we can go hotter and harder? Yes. And then we're going to lean in on you to see, okay, well, can you help us identify the thematics? Because we know we want to be in the leaders in those. So I'll stop the share.
Makes me think of 2000 there. I was sort of, I used to work for the ASX, and then one of my friends was at the ASX and she moved into surveillance there, and they put her in the small cap minus sort of section.
A lot of where you get that one.
She had, obviously, if the market moves a lot in a single day, the ASX sends an alert out as to have. Yeah, but if it's moved too big and moved a single day, I saw her on a bus here one day because she lived in the same area as me. She said, I think it was somewhere between 200 and 250 alerts in a single day. So the market had moved there. So that was crazy. So that might be, I guess that's sort of, clear numbers and then clear moves, I guess, as well.
Yeah. So that tells us there's still more road to run in momentum if the market tilts and leans into that. So, but have a look at the momentum companies. This is something that you and I have talked about a fair bit, which thematics are coming out of it. And you've shared with me your list of the companies that you've picked out of the top 30 list. Is there a sort of, which thematics you want to start with? Because I think it's pretty obvious which ones have been tearing. There's gold, but what else are you seeing?
Well, I've just I saw obviously the, like the rare earths and battery sort of stocks, obviously they're going crazy there because obviously the US taking stakes in some of these, and then China saying we're going to hold some back here. And then even this morning, China's potentially looking at taking stakes in Australian companies. So all sorts of headlines around critical minerals. So that's driving those sectors. Obviously gold's still pretty buoyant. I was a little surprised to see defense in one of the headlines there, because I thought we've sort of seen a bit of deterioration in a lot of defense stocks, but there might be some just outside of that, which are probably more mineral based than strictly
defense.
Yeah.
So So, well, we've turned on screen share, I think, so hopefully you can load up the charts. And as Gary's doing that, the themes, I guess that we can start with, uh, your critical minerals, your battery age minerals, that kind of thing, those that fit into that headline of what you're talking about with China's supply chain restrictions and the US deployment of capital into so far US domiciled assets, but also looking to extend that reach into Australian ones, which could be listed on the ASX. We're looking at, I think NBA is probably one that you had on your list, starting with that.
Yeah. Yeah, like I was looking at this because this, I mean, it's had a pretty decent move here. So, actually, I can't really do it on this chart here. Actually, we're gonna try and sort of zoom out here and get rid of this. But if you sort of see this, I mean, even though it's a sort of smaller name here, it's probably coming from a low base, not really showing that sort of classic strength early. It did have like a bit of a B wave breakdown here. Volume wasn't great there, but then it did track through. There was, a little cup and handle at the high there, but then if you're essentially breaking out here. So when there's a bit of a VCP in here, but really you're probably looking at 52-week high, Chris. There's more of a catalyst and stuff there, and that's probably the day where we see a bit of volume come through as well. So that's kind of that. That's all sort of kicking off around that. All those announcements there out of the US and China and stuff as well. So, you can. Yeah, it's a funny one now. Sort of been looking at these B waves. I mean, because things are just going crazy there. One of the things entertaining was like, just wait for that, strength, stay in the top half, break a B wave break, and then spike. So that would have worked really well here recently. So it has some big moves, but it doesn't always work out stuff there. But I think, but it did make me sort of think. There's a question actually I had for you is that, is there a time to break your rules? And if you are going to break your rules, which ones can you break and which ones can't you break?
That is a great question. And something actually, I think it was in the last week or last 2 weeks, one of the members asked we had a bit of a conversation about that, in that you and I don't trade under 50 cents normally.
Yeah.
But just like as we looked at the momentum profile, we're way up there. So we're in rare air. We're more than 2 standard deviations away from the last 2 years. And we know within that, like all the things you've talked about, we need to be trading above the 50-day moving average. We want to see volume support in the setups. Yes, we want a strong theme. But to trade under that, I've actually, on my short list, I've been looking at a couple of companies under 10 cents because the price increments are so tight, under 10 cents at 0.1 cent. I can sort of fit a better stop in than I can at the company's trading at 15 cents or 45 cents.
Yeah.
So I've been looking at that, but this is, I know how you have red, green, and amber. This is like super, super, super bright green. That's for momentum. I know that's an index thing, but for momentum, we're way up there in that rare air. We're sort of 3 standard deviations plus away. In that type of market, I would remove the 50-cent rule. I still stick tight to it's an 8% stop loss. I need to have that, and I need to have 3-to-1 risk reward. But when I'm trading in that 50-cent rule, I actually more look to have 5 or more risk reward ratio. So that's how I do it personally. How about you? Are you break with your rules?
It's funny you say that because it's sort of like it's something similar to me. It's sort of like I normally don't trade. Like there's a few stocks haven't traded here recently, and one was actually on the list. There was actually, don't want to jump ahead here, but on the launch pad there, RHI was one that I did see, and it did break out here. Liquidity was pretty low in this one. I did try to just buy a smaller parcel because I sort of like that would be breaking kind of my rules because liquidity wasn't awesome. But this is one of the ones that I mentioned earlier. I had a trouble with Iris. I sort of like missed the match, and then it doesn't allow me to mend the order now. You have to go to delete the order and then place a new order, supposedly. So, which I'm still finding out. But I've missed 2 EPs with this new Iris change. So it was like, and so, but the two things for me is probably liquidity is one there, and then and also the 50 cent as well. So I would try not to break those two. So those are two that I might break my rules for. But then what I would do is I'd go smaller.
Yeah,
Whereas,
definitely. Yes.
yeah, where at the moment it feels like everything's hot, everything's breaking up, and so I like to sort of see the stock stay in the top half. If they're trying to see how this has stayed in the top half of the chart here, that's well, we've had it's like this sign of strength, staying in the top half, tightened up. That's all good. But we've seen a lot of stocks come back deep.
Deep here.
Yeah, so they're below the 50-day moving average, and they've had a deeper correction there. That's sort of, I don't like that. So even though that's been working a lot recently, that's not my. I feel like I'm breaking too many rules there by doing that. But yeah, it's just interesting now. Sort of like I've broken the small one there, but the one rule I would not break, Chris, is the sector rule. Like we're sort of seeing a lot of setups. If it's in a weak sector, I do not want to trade that. That's a rule I do not want to break for. I mean, we shouldn't really. It's weird because the market's so hot here. Where this is what happens when you get near the top two. You start to break one or two rules and more rules, and then that can lead potential to greater hardship down the road. But if we are going to break any rules, the liquidity and the pricing increments, probably the two small ones, and I would, by breaking a rule, I would go down a category in terms of position size. I'd actually take half of what I normally would do. So I'm just putting less risk on the board if I'm going to break some rules and stuff there. But I would never break the sector rules. I would got to make sure that we're trading in those relative strengths areas and strong sectors. Don't take a chart because it looks great. And breaking one or two other rules and stuff there. It's got to be, must be in a strong sector. So I have actually bought something under 50 cents here in the last couple of weeks. I've actually got one or two. And they're just a little bit under. So liquidity is not bad. And, but yeah, I've taken a half position on those as well. Both done okay. So I can't complain there, but I am sort of in my head, I'm wondering, am I starting to break rules here at
the wrong time?
At the very wrong time to actually start breaking rules. That's definitely in my mindset here with seeing how hot the market is. So,
considering it's something that you and I have both toyed with personally, and now talking about it here, anyone who's toying with that one too, comment below and tell us which rules you're toying with and which ones are sort of borderline. I know ASM, if anyone wants to look at that chart, that one was borderline my rules.
Yeah.
And it drew down more than half the range, but it was stacked up in the thematic, and I wanted to be in that thematic. So that was shortlisted. I need to monitor this. We all know to still see, but we should get back to the other ones on your list, because I know you've got a few that you picked out, and then a few members were in the same space. So BOC, it's a nice chart.
Yeah, it's a BOC. So again, another, we do have a sign of strength there, some good moves, good volume, and then we sort of wind back, and then we sort of start to come through a few D-weights, and then the whole thing does congest and tighten up and then start to break out. And then we do start to see volume coming through there. So we've got our little VCP tightening pattern in there after a bit of show of strength, and then we're breaking through. And then we get the classic 52-week high close as well, which is, again, on good volume. It's funny, we go back and look at all those 52-week highs, Chris, that come in on strong volume, and gee, there's some powerful those. So it's so we've had a bit of follow through there since then.
So Bogey Copper, as the name suggests, it's in copper. If we just close out the critical minerals, because there are still a few on that, I think you've got Arafura, ARU.
Yeah, so we've got ASM was the number 7 there. That's that, again, that shows strength. I mean, there's a bit of a VCP there, Chris, because really you got strong burst, big volume, comes back. It maybe comes back more than half. It pops again, comes back, pops again. Whole thing tightens up. Then it starts to sort of come through. So it does have that show of strength there initially. Obviously, we go from 32 cents to 83 cents. So it definitely goes up more than 100, almost 200%. So that's the initial first leg up. And we know sometimes that can be 3, 5, or 7 months building before they go again. So that's the type of thing that you want to be looking for, is that initial 100% plus move and then a period of congestion. BM8 was number 6 on the list there. Just thought, and even though it's a pretty small one there was a bit of a cup and handle sort of developing in here. It's just too small for me personally. But again, a deep crack out of the 52-week high again on big volume, and then has gone with it. So there's a lot of these smaller names that have had this very familiar setup there of sort of cracking through big volume, hitting 52-week highs on big volume, and then going on. HAS, again, another 52-week high as well, smaller name, cracking through, just tightening up here and then pushing through. The breakout 52-week high was again on big volume. So, if you are trading these smalls, I think that's the sort of key, I think, is to see that breakout on big volume there. That's the, if we look back at, you probably look back at 90% of the ones that have gone on with it, gone on hard. I'd say 9 out of 10 breakout on big volume. So that is that's the killer stat that you want to be looking for. For those
RMX and AW1, yeah. RMX. Yeah. We had some questions on high tight flags. Personally, to me, I'll say, that jumps out straight away. It's more than 100 big rise. It's tight consolidation in the top third, top half, top third.
100%. Yeah. So, you've got up more than 100%, though. That's some people use 90%, some people use 110%, but it's, you definitely had that doubling in price or more so, the strong volume there. And then the whole thing just tightens up, whole thing consolidates nice and tight from here. Volume, see the volume sort of dries up. And it pops out again as well. So definitely a bit of a high tight flag in there.
AW.
We're all pretty late on some of these, so they're all popping. So I'm probably not getting guidance on a lot of these as to where I think they might go. I think they're all in the air. They're not, like unless
the lofty, the measurement rule probability for the full bell curve, where it's back down in the lower depths of momentum profile. So we're in rare air.
Yeah, it's funny. I did actually watch this because then we had that big burst. It was all happening one day, and the whole thing congested and tightened up here for multiple months. So it was a single 1 day jump. So we definitely went up 100%. We definitely got what what are we down here? Sort of 21 cents, and then we go to 60 cents. So we've gone up almost three times. But then the whole thing congests and tightens up. But then it starts to come through again. So probably this day here, coming out of this little tight pattern here, is probably the first real show of strength there coming out of that congestion pattern there. This day here is a little bit, and then coming out of it again. I like to sort of see that break of breaking the previous sort of swing high there, and breaking this again. And then again, we're breaking out to new highs again as well, which, and then the amazing thing here, this thing's held the 10 here. So, if you're anyone who's followed Christian Kalamagi there, trading the hottest of the hottest sort of stocks there, you do not want to see it break below the 10-day moving average. That's the strongest names there. You sort of, they try and hold a portion of them. So the best traders sell some of the heat, and then they track it with the moving average. And the hottest names are usually looking at the 10-day moving average. So you can see here all these all names, Chris, are all the ones that are on this list here that are critical. None of them are broken the 10-day moving average yet. They're still holding there. So if you sort of long some of those, you definitely want to be taking some off into some heat here. But the best traders will hang on until they break below the 10-day moving average, because we don't know how far these things can run. And this market here is just showing that if you've taken a profit at 30% or 40% or 80%, there's stuff around 100, 200% here. So these smaller names here. So that's why the best traders don't, that's why they hold some with the moving averages there, because they don't know how far it's going to run. So that's the reason why people hold those things there. When you're up by 50% or 80%, it's like your psych's telling you, sell, lock it in, you're up so much. But the good traders know you just got to follow that process and what you're doing there. KGD, other small name, held the 10-day moving average the whole time. They're still holding the 10 here. Had that little bit of a pretty big price bar rejection there, so that's something to be wary of, but still holding the 10 as well. VML, Actually, that last one there was a high type flag too there as well, there, Chris. That KGD. See how it's jumped up, and the whole thing tightened up as well.
Well, it says 27, 300% rise, or even higher on the wick, and then not even 2 weeks consolidating with volume dropping off to the start of October to almost nothing.
Just look how tight that gets in there. The volume drives right up there. So that I know there's a bit of a price action up there, but the body it's nice and tight here. So that's still a high tight flag in my.
Yeah, and holds a 10.
Yeah. Saw someone else talking about moving averages there on a different podcast, trying a whole different means there, but just talking about how important it is to. I think he's like an options trader who just trades the top 10 option stocks in the US, but still uses the moving averages there. So important that they keep finding support there on the dailies, the half hourlies, the 10 minutes. So they work across multiple time frames here, but we know with momentum names, those 10 and 20-day moving averages are so important there. And we've seen them just sort of hug those moving averages there. VMLs had a nice little cup and handle in here. Then the handle came through here on the 6th of October. Then it's obviously gone on pretty strongly there. So broke above the 24. That was the highest close there. So that's a pretty strong close there. And then it's gone on quite a bit from there as well. So, that was so much going on here, Chris. It's it's one of you probably if you go back and reflect on this period here, you probably want to print off probably 20, 30 of these charts there. There's some cracking moves in there.
A lot of that.
The problem is we might be 6 top 100% market as hot as this again, but you still need to be prepared for this, for when it does happen again. So how to, this one here is a nice little, again, a little high type flag in there as well. Got one developing at the moment there. What I was actually going to skip over this chart there, but I thought, no, this is actually one where, see how it fell pretty hard there and the volume was a bit heavier? That just kind of makes me if I saw that, I did see that. I was actually watching this one there. That just is not what I want to see. So to me, I want to see the whole thing tighten up and then break out with some volume. So it's actually...
You want the opposite. You want a green candle like that with that much volume.
Exactly. So it's undercut the 10 on volume, and then it's bounced back the next day on light volume. That's not what I want to see. So I want to see that hold here nice and tight on light, and then come out first day a little bit harder. So that's what I want to see. So just thought sometimes it's important to sort of highlight what we don't want to see.
Yes.
It looks too weak when we're just looking at charts that just go up. It does not.
We only choose the good ones, and we learn from that, but we also need to differentiate it to understand what we're not looking for. So MI6, that was on the list.
MI6, another one, 52-week high, and it has not broken the 10-day moving average. I mean, if we were just to go back here in time here, Chris, and go, if I see the small caps go to a 52-week high, and it breaks out on good volume, and if I just put my stop in at the 10-day moving average, that would have done pretty well. There's three good trading rules for a future small cap trader there. Just those three things importantly there, because therefore you're not risking too much, not sort of have excessing risk out there, because when you're trading small caps, you are going to be risking a bit bigger than normal, because the small prices mean that the increments are so much larger on a percentage basis, so your losses are going to be a bit larger. But if you can use the 10-day moving average or something like that, then it can contain that risk, which is the key thing for small caps. Because if anyone's been around the market long enough, you go back and look at your trading results each year, there's probably, sometimes there's one or two small cap events in there which you think you take those bad trades out. You probably have a pretty good year most years if you could get really your worst one or two, and they're often from some of the smaller, riskier names. But that was the case for me for a few years. So thankfully, it's been at least half a decade since I've made that mistake. So
well, on that, I'll quickly say, because that's where a lot of the research came from. So You and I traded the commodity super cycle. I traded shale oil, which is around 2012, that kind of period. We've had COVID and the sort of uranium, lithium, and those kind of companies shoot the lights out, cobalt, battery minerals. For us in Australia, it's kind of like we get the Olympics, those kind of huge events once every 3, 4 years. It can be more frequent, can last for a long time, like the commodity super cycle. But having traded them, I know that's where my edge can be. And trading the Australian market, that's where our edge internationally can be. But like you said, we've got to see the small caps light up. We've now created the momentum profile and signal strength so that we can understand how strong the opportunities are compared to previous markets. And then that's when it sort of says to me, okay, I can adjust these rules. And this is where this is time for sport. This is hunting season. This is time to harvest. Could be like locusts where they sit quiet and dormant for years at a time and then suddenly it's out. So I agree. Like we've got to watch those overarching markers and that's what we've built. And
I
that's
think
why
there's a
right now.
there's a small cap book called, I think it's Lion and Zebra Country. And so obviously, the lion waiting for its prey for its kill, so it has to be quite patient, so, and it also has to sort of spread its risk as well, sort of with small caps there, sort of oftentimes, because the risks are so high in that area, it can be quite damaging. I think you need to sort of spread your risk a bit more because you sort of, even like small cap funds, they're probably broader than, say, a large cap fund.
Concentrated large caps, yeah.
Yeah, so they will be, just because it's sort of like, they know that maybe 2 or 3 out of the 10 are probably gonna account for all the returns.
Go after baby or something like that.
Yeah. So we probably 2 or 3 that end up, 1 or 2 end up disaster. There's probably, half of the probably don't do anything, and then there's a 2 or 3 that just hit it out of the park, smash it, and then that makes it a successful small cap fund. But it's the ability to stay with those winners, and avoid disasters.
So for us, the individual traders, well, we're just spoiled for choice with A+, A++ setups right now. So like you're saying, you can take the position smaller and we'll cycle through them. And we should probably keep on at a fair tick because we're opening on time. But so KAI?
KAL. So
KAL.
look, another, so again, this, even as a small stock here, this is the classic sort of setup there, the big, powerful move, the 200% gainer. Then it pulls back, contracts, and then, so whether it's 3, 5, 7 months later, it starts to build into sort to go again. That's the sort of BCP sort of setup you want to see. I like to see them in the top half and then stay above the 50, preferably. That's the better sort of setup. But it did eventually get above the 50 there in September and then start to build. And that's probably the better, sounds funny here, but see below the 50 here in August, there's still a sign of weakness there. And even though it pops here, maybe it breaks a little bit of a B wave there, doesn't really go on with it. Whereas now it's sort of above the 50, it'll come back and sit on the 50. This is now it's actually a better trade setup here, even though you're buying it later. You think, but I could have bought it here. But you might have been sitting in this for another 30, 40 days before it really gets going. Whereas the best traders will wait for that sort of show strength and then wait for the stock to sort of start looking a bit more stronger and then coming through there. And then, because again, like the whole Minervini quote, you want to be in the market the least amount of time, make the most amount of profit. So people just coming into those setups, once they emerge, you start to show that sort of strength there. So, so it's our brains want to buy the low. We want to say, ego that we got it down lower, we got it down here. The best traders don't care about.
No, like take the lows and
getting the lowest price and stuff there. All they care about is it goes up next day. That issue, that's really the only thought you want to have is that once you buy the position, that it ends the day that you bought it strong. It doesn't show weakness and it continues to keep going up. That's the only thing we got to look for. TOE. Here's one that did cross below the 10. So there's a few in here that actually did cross the 10 and come back up again. So, I probably wouldn't have liked to have seen that personally, even though the volume did drop here. That's probably the plus is here that you saw the volume go up pretty strongly here. And then we saw this whole thing just drying up here, even to the point where the last day is pretty smallest volume day. So again, like that 52-week high, breaking out on strong volume. When you get that contraction, oftentimes the smallest volume day is the last contraction. So it's hard to pinpoint that exactly because you don't think, oh, could the next day be even smaller? But if it doesn't, you want to, that's why, like, I know Jack Casellas said, if he sort of saw that tightening up, he would look for a range. He would buy a range break. If it was more squarer, then you break the range, and that's sort of something you can probably, we talked about going to the 50-day moving average and looking at those. Looking at the half-hourly charts and looking for that little range break in there. But AII, and this is sort of one that I did look at a while ago, Chris, but it's, it's shown that really strong, that had that really tightening pattern there during the year, very light volume through here, and then kicked on, but then it actually broke below the 50, which was kind of a bit of a no-no. So you wouldn't have liked to have seen the break below 50, but it has recovered pretty quickly and then congested there. And then, so coming through here on this day, it does break out with a bit of volume there. It's probably the first sign there that, it's getting interesting again. But yeah, the whole thing has just kept going. It hasn't looked back yet. It hasn't broken the 10 until today. It still hasn't finished below the 10.
Yeah.
But there, that's probably not the best bar here, even though there's not a lot of volume going through here. But yeah, that's just a terrific move there. So, what have we got there? VHN, VCP, a little bit of a tightening pattern there in September. Again, it's a bit weak. It's sort of trading, was under the 50. Probably not the strongest name here, but small. A bit loose as well, so probably wouldn't have made my list. My Kitchen Rules, MKR, had that bit
blew my mind.
Yeah. So it did. I mean, the plus there is that it did break out. It's come out of here. I mean, big volume, and then it goes to a 52-week high here on pretty good volume. So again, just breaking these smaller names there, 52-week high. You use the 10-day, you might have got stopped out a little bit higher there. But yeah, I mean, they're just hard to trade, those smaller names. They're just trickier. Yeah. That's it from the quarterly list there, Chris. Same end.
So that's a lot of companies, a lot of huge setups, a lot of massive 100% club, high type flag candidates, huge movements. And just to summarize what we saw in there, so we saw energy transition, battery and renewable energy minerals. We saw Western aligned supply chains for the geopolitical supply chain diversification, so the US deploying capital, the rare earth elements, critical minerals. And then we've just got traditional mining as well, gold in there with massive gains. When we look at the launch pad, so this is something that you and I were talking about before recording, the thematics that you're seeing there, is there a way that you would break those down and have a look at what you're seeing? Critical minerals, gold.
Yeah. Well, I mean, they've been going for a while here, so that's, that I'd be careful there with what's happening there. I saw Sun Silver was in there, SS1, which, nice little cup and handle there, and then another burst there. So it just goes to show, it's been pretty strong. This is quite a newer company there. But even though this is a higher, did come off, it did get on a new high here, then pull back there, but it's come back in 3 waves. And then look at that first day, bang.
Massive volume.
Yeah, big volumes. Within 1 day, you're at the high. So I know, McLaren is the sort of guy, you pull back and congest, but then all of a sudden you burst. Like within 1 or 2 days, you're back near the high. That's a show of strength. So that's a massive show of strength there. Because we're literally 1, 2, 3, 4, 5, 6, 7, 8, 9 days correction. A, B, C, classic Elliott wave correction. And then 1 day we're back at the new high. That's a sign of, that's not a sign of weakness, that's a sign of strength. So so it's still sort of kicking along here, this one. So been a little choppy, this one. It's definitely had its ups and downs here. So it's not really from a momentum point of view, it's not like a drone shield there where you're getting that burst and then contraction into the MAs and then burst, contraction, MAs, burst, contraction, MAs. Not quite as clean as that. So a little bit messier, a bit trickier. But yeah. RML. It's funny, I did actually have this on my dip. I was watching this. I don't want to be trading 5 cents, but I was just watching this for curiosity's sake because they come up as, I look at sort of mid cap and large cap sort of each day who's moving and stuff there. But I mean, this had that classic more than 100% gain. It's contracted here, tightening up here. I mean, to me, I'll be looking at this whole thing contract here. It's sort of stayed in the top half, so that's a plus for me. Good volume on the way up, plus for me. Then I'm looking for like a D-weighted break here. It didn't really break that. It kind of gapped through and gone through. So,
and this was the company with the, what was it, Kevin Rudd going to meet with the US the ambassador meeting and asking for a bit of an update on the company before he went to have the meeting. It's kind of a bit of a, do you think he might table a discussion on RML? Maybe.
I wonder if his wife's holding any shares.
The cynical approach. We're talking about those speeding tickets at the start of the recording. It all fits in together. But ATR is another one that's roaring.
Yeah, it's like, so again, another little VCP there back in that sort of September range there. This has been pretty strong coming out of here. It's probably a better sort of setup there because it's sort of, purpose little mini bracket at 50 there. It's sort of held there. But did have a little bit of a B-wave break here on this day here and volume okay on that day. And then, a bit messy, but has gone with it as well. So we're just seeing a lot of smalls in here. That's definitely sort of still seeing, suddenly up. Yeah, this interesting again, had that big burst, pulled back and recast the high, then it's sort of faded here again. So that's the sort of stocks that we want to sort of keep an eye on there because they can go again, but hasn't really sort of set up ideally here. So it may need more time there. So I just wanted to keep an eye on that. CXO is just in that, that lithium space there. So that sector's on fire here, a bit small name here, so too tricky for me. Been a bit of a laggard there. Did notice that Jumbo actually had an EP there, Chris, during the week. Made an acquisition on this day here for those who like trading some of the big caps there. So I thought this was looking very, I thought this was actually pretty constructive here. And looking up here, I think I actually might have even bought some here on this B-wave and then got sort of stocked out there. Just I thought this stock looks pretty cheap. But yeah, came all the way back, washed out. Did have some break news there, but basically made a little acquisition there. And I figure the market would like that news because it sort of it indicates a sort of a small acquisition in another market, and I think it'll add earnings to the share straight away. It's a pretty cheap acquisition, and just gives them a foothold in another market. So I just thought, that's market wants to see companies keep growing. So yeah, and look, it's gone on quite nicely. It's had a pretty good run. So you're still seeing some of these. You still see some of these things in big caps as well. There are a few big cap opportunities there. I know James Hardy as well has sort of traded, okay out of it. See how it hugged with 50 and then sort of gapped up there. I haven't traded this one, Chris, because I did see this nice little tight setup here. I thought, okay, that's actually pretty constructive sort of price action. But it hasn't been a strong sector, building sector. And also I'm a little worried about fundamentals there. Obviously with all the tariffs coming up here, we've got US reporting season on our doorstep here as well. Felt like it's a company which could, these tariffs could have affected James Hardy quite a bit. We're sort of seeing quite a US, like a lot of companies who were trading, in the US a lot, having a few issues, so I just thought this is a set. Yeah, that's why I sort of think sometimes you can get a signal, not that it's the best signal, but it's not in a good sector, not in a sort of, and if you worry about it fundamentally as well, I wouldn't take the trade. I'd only sort of trade good setups there that they're in strong sectors and sectors you kind of think you believe in them as well. So I think you just want to, just avoid avoid risk here as well. AXC sort of, this is a name that's been around for a while. He just does worry me. This one's coming to the party a bit late, so pretty choppy as well. Not the best sort of setup. SVM, SVM. Yeah, another one that's pretty choppy as well, coming a bit gappy here as well. So not showing the sort of great stuff there. RHI was one that I didn't like. I think TTX is another one, Chris, that this is quite a new name. Did sort of see this whole thing tighten up in here, like a bit of a BCP in there, but gee, mate, hard to trade some of these shares at the liquidity. I think might have been 4 price steps to get like a 5% fill from market.
Hard fill.
Oh, yeah, so it's like, can't trade that. Can't get out. AGG. Just got this one to watch there, just because it's had that big burst, big volume. So now we sort of see where they can congest and tighten up. So that just sort of goes on my watch list rather than my list there. FMM. Yeah, I mean this just stayed pretty buoyant there. Bit of a cup and handle sort of set up in here as well. So we've definitely sort of come out of this high here, bit of a handle in there. Not a lot of selling through that period. And it's come back straight to the high again. Dip went a little bit higher and then undercut the 50, which probably would have knocked most of us out here. But sets up again. Maybe this is a better setup in here. The whole thing tightens up. That's the better sort of trader is to sort of tighten up, probably hold a moving average there and then start to come through. Again, it's it has been a little bit gappy, cutting, so it did pop up, come back down again, go up again. So that's the problem with some of the smaller names here, and also so there's some of these stocks they can be moved around a bit there. Saw SNS was another small name. I just sort of saw how that big burst and tighten up, and has had that tight, and then so I don't. For some reason, I was literally typing in one of the codes on the list, and that came up accidentally.
Hang on a second. High tide flag under that sense.
Yeah. So, but it looks okay here. So, I think that's kind of it there. I think I've covered most of them there. But yeah, I mean, it's pretty. There's a lot of smalls in there. There's a few different sectors in there. But I think one thing we agree on is I'd say 80% of that list is metals.
Yeah.
So and you'd be critical metals, rare earths, gold, silver, bit of lithium. So yeah, it's
that's it.
Yeah.
So something that you and I share, and Charles gets as well, and a few others, but not many, and we shared it with members this week, was an interesting insight. Exactly that. I think it was the momentum list, and we looked at the top 20 themes on the momentum list for the top 200 companies. So we have a broader list that we look at to kind of identify the emerging thematics. Every single one of them was metals, minerals, rare earth, like gold producer, gold explorers, every different way that we slice it, because we've got 380 different ways, but every single one of them was mining related. So when I look at that, I look at the momentum profile, I look at the signal strength and the data that we've collected, and this says to me, I'm not too concerned with what the index is doing. For my personal trading, I can see there's a huge momentum opportunity. It's ripe in Australia because we have so many mining companies. When we do have high and tight flags, it rains, it pours, and we can have dozens and dozens and dozens within a week. And there are A+ setups within that, and I can break my rule and trade under the 50 cent if I need to. But I'm rotating between A+ setups, A+ setups, A+ setups. But like you said, my position size is actually going to be a little bit smaller because I'm under that 50 cent barrier. These markets seldom come up, and when we do, this is when we make hay when the sun shines, which was a quote I think Governor Book had in the New York last night, which didn't go down too well with the American audience not understanding that saying. But is that how you would be looking at this market, or have you got a different take on the opportunities in front of us, Gary?
Oh no, I think you've hit the the nail on the head there. I just don't know if I've actually traded this as well as I could have there. I think I've I've let maybe my view of sort of some sectors in the market and stream me a little bit. So I've been yeah. So I mean, really, if I look at trades, I mean the stuff that I've traded well, but I've missed a few opportunities there, and I've probably been distracted by looking at how profitable this market is and sectors getting, it's being so heated, and also the smalls as well. You're seeing so many smalls there, so it's hard. Even if you don't trade smalls and then smalls are on fire, you feel like it's a bit of fun. That's why I sort of asked that question. There, sort of, when do you, is there a time to break your rules? So because I'm questioning whether I should be or not, but But I mean, if I'm going to break a rule, I'm only going to break a few minor ones, not the major ones. Yeah, that's there's you've just got to stick to your principles there, I think, as well. Because the risk is here, you start breaking one, maybe you break two, and then
it's not a good habit.
Yeah. So it's hard there because obviously we're seeing so many of these spots where probably half of those charts were probably 5, 10, 15, 20, 30 cents. So that makes it pretty tough. If that's where the winning trades are at the moment. So if you're not in that area, you feel like, why are my stocks going up 50, 100%? So because I don't trade 5, 10 cent stocks. So so you got to be careful of that as well. So just but it's interesting there. I just know personally, I probably haven't. I've let my view get in the way sometimes of sort of rather than just trade the setup for what it is. If I just sort of followed those leading names, leading themes. So it's weird for me. I sort of feel like if I went back and looked at my trades, I'd probably give myself like an 8.5 out of 10 for the way that I've traded and handled my trades. I've done pretty well. But what it doesn't show is I'd probably get like a 3.5 out of 10 for the all the trade setups that were present and the ones I traded. So I missed a lot of good setups there. But you can't beat yourself up as well. Sort of the key thing there is just to keep learning as well. Keep And look, my account's been ticking along pretty nicely. Like it's the best start I've had to any year since I've been trading. So and I'm disappointed. So that's okay. It's okay. So I've just got to put out context as well. So the main thing now is to hang on to that. So is not to rip it up here. That's why you just got to be. So I'm kind of asking that question now about breaking rules and which ones do you break and not break, because you've got to be careful as a trader here to, not to go down the slippery slope here of exposing ourselves to more risk and start taking big trades and stuff like that. So but I mean, fortunately, Chris, there are still lots of good A-class setups out there. So that's the plus. Don't even though I'd say some of the B's and C's are working here, don't worry about that. Just dismiss those. The key there is to sort of go back and look at your last 10 trades you did and didn't meet all your rules and principles, and that's all that counts. Don't worry about some other one of the other mates has made more than you, or you.
And normally only tell you to try and do as he has today, blew up on.
Yeah. So just don't worry about that. It's all about, all you're trying to do is focus on you, and make sure you're improving. So even if it's just small steps there, because we know that small steps in our own trading, our own rules, our own process, can lead to big steps in terms of our results and stuff there. So don't worry about all the noise around you. Just focus on, make sure you're improving personally. You're learning more and incrementally just getting slightly better each day and each week.
And with that insight, we'll put a whole playlist of trading education on the right-hand side there to jump into straight after this video. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.